to see if I could put on some more royalty-free music. Let me just sort of, I love listening to music, and I just want to make sure that I have some royalty-free music because I really enjoy music. And so I want to pop that on there just to make sure that I don't, because I don't want to have to take it down, but I love having music on. So that's what I have to say about that. All right, I think I have enough space here. So I'll put this on, and I'll just make sure that this is muted and this is muted. All right. So this is royalty free. We're good to go. All right. So hello, good afternoon. I am back to trying to get back to my live streams. Life always tends to happen. Kids were sick. Daughter had her tooth out. My mom dealing with liquidating everything out of my dad's or their property that they're selling. So lots of stuff, right? Life always happens. But I'm trying to get back to help you guys 15 minutes in the day to wrap up what happened with the market this morning, what's happened this weekend, where are we going, what am I seeing? Oh my goodness, get ready, right? Because this is going to be a wild and crazy summer, right? Let me tweet out the link. I like this song. Someone asked me today, if you had your own land, what would you call it? And I said, Happy Bill. Because I try to be really happy and share that. All right, so let's move on over to muting the stream so I don't have any feedback for you guys. All right, you guys can see it. Every morning, 8:15, I am live streaming my list for my members on my channel. And we mapped out some awesome trades. More importantly, the indexes were pretty amazing. But what I really want to show you is we are so close to wiping out the entire 2021 move in the market. Let's hide all the drawings. Hello, hello. Look at this. So it opened right here. 2021 opened at 375.31. Put that on your chart. 375.31. We will have completely wiped out. This is a 12-month chart. And we will have completely wiped out all of 2021. That was Fed stimulus. Now, here's something else to look at, right? We had massive money coming in 2008, and then it's just slowly been descending from that point in time. A big bump again back in 2020, and it's just sort of been dropping down. So this, to me, was all of that stimulus. Hey, we are going to bail out the banks. We are going to support this. We also saw that it happened on XLF, which is the bank financials, right? That was pretty much the bottom of the bank financials. We're back in January 2009, and we had big money pour in 2008, 2009. And since that point in time, it's just sort of been riding up. Now we have seen as well, this is a 12-month candle on XLF. Let's look at the Qs. What does the Qs look like for yearly? Oh my goodness, we've already taken out all of last year. The big pictures have really made me see that this is not good. This is not pretty for the markets. And let's look at TLT, right? TLT is the bonds, 20-year treasury bond. How are we doing? Oh yeah, not pretty. Who's buying bonds? Are you buying bonds? I'm not buying bonds. Who's buying bonds? Anybody buying treasury bonds for kids, for the newborns that are out there, right? If we look back at history, repeat of what happened in history, right? This is just now a couple minutes in. Who knows? If you know what happened, what caused the crash back in 1929? Do you know what it was that actually started the crash back in 1929? Put it in the chat, right? And if you do like the live stream, make sure to hit that like button, subscribe, turn on the notifications so you know when I go live, and share with your friends, because I'm here to help other retail traders, because it's us against the really big guys and the dark pools. And I'll show you something that we saw today that leads me to believe that there's also going to be a bigger downside. All right, so nobody has the answer to what caused the downward turn of 1929. It was the bond market crash, right? So let's just go really quickly and see what's happening to the, oh, let's look at, this is cool. I've never noticed this before. Treasury deposits with the Federal Reserve. Okay, so interval is days, weeks, months. Okay, so let's go to, we have 12 months. That's one that they say that does not exist. Let's go to 3 months. So it was really high in July of 2020, came down October 21st, and now it's up. That's not really what I wanted to see, but still cool. Let's just look at bonds, right? We're seeing that, let's look at the 10-year. We saw that with, let's go to 12 months, starting to curl up, right? But the 20-year is having a big sell-off, right? How about, let's look at 2 years. 2 years, it looks like maybe some people are putting money in. This is the 12-month. Let's look at the monthly. Likely going to be a bit more to the upside. All right, so bottomed out. And then beginning of this year, when we also started to see the interest rates were going up, now we've just taken off right there. But it was the bond market that actually created the drop and the crash of 1929. So if we start to see that there's heavy selling in the bond market, that could end up with confidence within the US Treasury waning or dropping, and then a bigger move to the downside, right? I mentioned 375.31 knocks out the entire year from last year of 2021, right? We opened right here, 375.31. So we're close to knocking that out completely. When we look back, let's turn on some of the other moving averages here, right? I have those lines on here, 375. The next year down would be down at 323. We could head back to that, right? We might come all the way down to 323. If we broke down even further, we might go all the way back down to 250, right? I think we might be seeing 200s in the next 18 months, not immediately. So if you guys want to learn more about the dark pools, how we spotted the selling that happened right up here, come and check us out at thedarkpools.com. And today, right, we are looking at the dark pool prints every single day. We are mapping out trades. In the mornings, I create my own lists and I set it up on my website, but here it's better because you can see me building it. You can ask me questions. You can find out weird knowledge, like thyme is really good as an antiseptic when you have a cold. I share all that random stuff too. And we'll also look at cryptos as well. But looking at this, we had the SPY here, right, 380. We had a nice drop off of 380. Look, we went all the way down to 374.93. We were prepared. Now we're testing that resistance from the pre-market resistance and, excuse me, support and resistance. It's flipped to be resistance now. Are we going to come back up and potentially fill this gap up here or break down? Well, the volume is dropping off here. We will see, right? We were heavily oversold, but we did have a melt day today. We have a lot of things going on this week. We have FOMC Brainerd talking at 2 o'clock. We have PPI numbers tomorrow. We also have Fed numbers, FOMC statement coming out, FOMC meetings going on. Fed rate, are they going to raise it 0.5%? Are they going to raise it 0.75%? They could be building in 0.5% rate hike. So we do have that tomorrow. We have unemployment change for Australia to Wednesday night, Then we also have more chatter from Powell on Friday. We have a lot from England on Thursday. We also have our unemployment numbers on Thursday. It is a big announcement week. Plus, Friday is the expiration of monthly contracts. I believe it's also quarterly contracts. I could be wrong on that, but I think it is also quarterly. Is that a quad witching day? Let's see. It is June 17th, 2022 quad witching, which means that all contracts expire together. Quad witching days of 2022. Oh yeah, that is going to be Friday. So Friday, it is going to be wild and wacky and a crazy day in the market. It's also going to be, we do have Juneteenth Day, which will be celebrated on the 20th. So that could be a long weekend. People could be closing out short positions. People might be entering. And we also have expirations of everything all together. If you're curious, just go to Quadruple Witching Day for Wikipedia and learn about it. So right now, seeing massive selling, right? And what does that mean for the market? Well, this morning, we saw some crazy prints. Look at that. These are dark pool prints. These are end of the day from Friday. If you want to learn more, come to thedarkpools.com. You will understand. This is where the SPY closed. We are seeing it today. Why are we seeing it 24 hours later? Well, there's a loophole, right? And we're likely going to see, if we stay below this, I think we will likely head back down to that 320 mark. I think we could potentially see that we will have another 60-point move to the downside on the SPY. Down lower. I did mention it a couple weeks ago as well. So it's just being prepared, right? But what does that look like? If the market starts to drop, let's also check out Apple. Apple and Microsoft are the top two in the S&P 500 and the Qs. Well, Microsoft has a bit of a dreaded H. Let's look at it on a weekly chart. Weeklies are giving us that big picture. Where is our rebound? Maybe we're going to come down here. Maybe we're going to come down to 232 for Microsoft. Let's check out Apple, right? Apple had the split and then it started to move down after a big surge up. But now we're seeing, hey, maybe we're going to come down to 123 area. We hit that 161 down to 119. That was the low that we hit pretty much just above it in March of 2020. Back in 2019, we went below it. Microchips, Chinese production, all dropping down. So is that really going to affect it? We have a downward megaphone wedge. We're below a lot of volume-weighted anchor prices here. And next one could be down at that 123 area right down here. If we had a full-on melt, maybe it's coming tomorrow. Usually Mondays tend to be a positioning day. Today looks like a continuation day. We do have the abandoned baby gap here. So are we going to fill the gap to the upside, or is this going to be further melt? We'll find out later in the day. 2 o'clock again, FOMC Brainerd is talking. Amazon too, moving to the downside from really the split, and big volume was at 122 area right here. So looking to see, we are well below that. Are we taking out the low from 3 weeks ago? Are we going to break below 101.26? We were 80 cents shy today. I will never forget hearing Bezos say, one day Amazon will go bankrupt. Well, is that day coming, right? Is that day coming at this point in time? We will see. The good news is if we go above 389.95, maybe we're going to have a rebound. But as long as we are staying below this, let's look at the big picture too. Let's put a big picture view up here, right? Weekly, hide. If I do, this is the volume profile, right? TrendSpider also has this. It's amazing. Where is all the volume? Up here at 445. That's where the big volume, the point of control is. Where is it from closer viewpoint right here? All right, we'll call this 412. How about from our last bounce? Where is it? Way up here, 412 still. So we are below this massive volume. Until that volume profile flips, I'm bearish, right? We did hit the 161 potential bounce, 378.04, but I would need to see some more prints. I would need to see big, heavy buying prints, and I'd need to see it move up above over here for me to be confident, right? We have a little abandoned baby. We could do one of these things, and many of the charts will mimic it. Or we could just have sort of a doji day, and tomorrow maybe we open lower and we just continue down. But we are definitely in a downward trend. This market is looking to, the Fed is doing everything now that they can to contract the market. From March of 2020, they were doing everything they could to expand the market. We are officially down over 20% off of the top of the SPY. And so we're pretty much in recession territory. It's now 6 months into this downward turn in the market. So be prepared, right? What does a recession, potential depression look like in our lifetime? How can you prepare yourself for this? I'm not saying that it's definitely going there, but the Fed is talking about continuing to raise interest rates for the next couple of months until September. That does not look like we're going to have any sort of stimulus going into the market. And with the Fed in control, we say don't fight the Fed, right? Just be prepared. If you don't know how to short, come on over to the training pit. We'll teach you. And be prepared for the downward type of trades in the market, as well as in crypto, right? So crypto, let's check out the cryptos. We do have Bitcoin, boom, getting burned. Bitcoin futures do tend to lead the market in telling us where the market is going to go. And I like to do this on what is up and what is down, right? So we have Gala. We have a couple that are moving to the upside today. That is from 8 p.m. yesterday. When we look at Bitcoin, look at the Bitcoin chart, right? And so we have, this is a weekly chart right now that we're looking at. We are below the 161, which tends to be a support level. We go to the monthly chart. Let's look at the monthly chart. How's this looking for us? It's not pulling up a 161. Let's throw an anchored volume weighted average price on there, right here. Good buddy Brian Shannon created this. So if we go back to the beginning of the low from December of 2018, that's down to 20,000. We bring it forward just a little bit. We have touched it today. So if we go to February of 2019, we touched that level today, 22,317, just shy, 22,600. When we look at this, this is what gave me the full-on bear view. We go to a 12-month, a year chart, right? Well, we have a big gap down to roughly 13,764. That's another 10,000 to the downside. A lot of people that have money in Bitcoin, if they put money in, as long as they put it in above 13,000, where would their stop be? Maybe 15,000. You know, where would their get out for sure be? People are seeing that we've taken out all of last year. We are going into 2020, right? For the move from 2020. We go down to 13,000 and we break that 13,000 level. We are likely going to be moving down further, potentially down here to 7,000 and then down to 3,400. So keep those areas on watch. If we do it as a monthly chart, right? Or even 3 months. Let's put it into 3 months here. So quarterly chart, we've broken below, right? And that next level down would be roughly that 13,760. On the monthly, we have some more stair steps that we might be taking and finding some bounces. Next level down, if we continue down here, is 19,896, right? And Bitcoin does tend to be the number one that people will base crypto off of. It is the low float of the crypto space, and a lot of this is tied to USD Tether. So if everybody were to take their store of wealth out of Bitcoin, they convert it to USDT. They sell it to USDT. They don't recycle it into the crypto market. They take that and they want to take it out. That means that the USDT source of USD will be dropping. It could be like a bank run on the banks like we saw in 1929, right? If everybody, as long as there's enough USD backing USDT, we're good. If they were to say, hey, we've never had a valid audits, right, of USDT. If somebody finds it, please let me know. Send me the link, put it in the description below. Put that link in, because we could see that USDT crashes as well as Bitcoin as well. All right. So that is it for today. Just be prepared. Come and join me in the morning. Sign up as a member. We will map out some amazing trades and get you ready for the trading day, whether it's a bullish day or a bearish day, so you can lock in some profits. Okay, all it takes is a little bit every day. If you actually lock in 1% of your value of your account every day, you're going to have 12 times your money in one trading year with holidays off. All right. So have an amazing rest of your day. Carpe profit, seize those profits one trade at a time. And I will hopefully see you tomorrow.